Great to see you here again. This is the last video of our webinar for lesson 10, and we're going to talk about the preferred supplier list. When we look at larger companies, they tend to work with the supplier list. They have been selected before, and of course you have here the confirmation that these suppliers provide you the products or services in the amounts, qualities, and timing that you need. Now, before you can become a preferred supplier, you have to pass a selection process. It can be a demonstration. I became preferred supplier for a bank here in Czech Republic. And during one of my classes, I had some people evaluating how I was teaching. Now, you look at the quality of the supplier, the production processes, the financial parameters, qualification of employees and other items. When you are dealing with suppliers, for example, when you want to deal with implementations of IT, for example, you need to have people or suppliers who have the certifications. When you want to work with project managers, the project managers must have the qualifications. Now, once you have been selected, your name is added to the list and you're part of the suppliers, and the people who need you can, or when you need a supplier, you can take a supplier from that list without any special clearances before. Now, once we have this, we are looking also at how are we going to deal with certain projects, and we need to have information, and we do that using a request for information or a RFI. An RFI helps you to find the technical possibilities. You want to make a project, you have some ideas, and you want to find out what is available on the market. It provides you confirmation of the ideas that you want, the technologies that you're looking for, or in the other case, you can find alternatives that may be unknown for you, that you didn't find before or that you didn't know about it. Some companies may have some better solutions than the solution you have in mind. The next thing is understanding the market is one thing, but you also want to know how much it will cost. So then you go for what we call a request for quotation. And the request for quotation is about understanding of the price. What is the cost if you apply certain solutions for your project, because you have to integrate them in your business case. Now, you also have to look at timing and quality. When you see what the suppliers can offer you, you may have the nicest solution, but if it doesn't fit in your time frame, that may be an issue. So it's not only about the cost, but also timing and quality that you want to understand. What will be the financial effect or financial effect and cost and quality effect on your project? Once you know this, once you have your idea, you can start what we call an RFP. And an RFP is in fact a process where you're going to present a solution and you're going to give that solution to different suppliers. Those suppliers then will offer you a price, eventually offer alternatives, and you have to evaluate the proposals that you get. And from this moment on, you can continue with the negotiation process to finalize the contract. In some cases, we also use what we call bidders conferences. Here we have all the suppliers on let's say, on one conference, and they are bidding about a price. We did it a few times in AT&T. It didn't happen a lot in the time I was there, but basically people look at a standard price and then they're giving discounts or they're providing a cost for the solution. And at the end of the bidders conference, you will select the supplier who gives you the best alternative. And from that moment on, once you have selected the best supplier, you can still negotiate to have better alternatives once the selection has been made. Now, when we look at source selection or supplier selection, we have to look into different parameters. What are the capabilities of the company you're talking with? The product cost and life cycle cost, very important to see what is the initial cost, but also we are looking more and more at the life cycle cost. Delivery dates, what are the possibilities for deliveries? Very important because it has to fit into your project plan. Technical expertise and approach of the suppliers, very interesting because you want to have a good solution. You want to know, for example, if they have been working with you, with other people, how is their technical support, their technical knowledge on the subject. You want to find some specific relevant experience, references they have, other contracts they finished, and you can find out if they have a good reputation or not. You have to verify with the compliancy with the work plan and the statement of work. So when you have the elements, you have to look at those very closely because you have to see once you get the offer, does it comply with your project plan, your work plan, and the statement of work, the scope that you need. Employee qualification, availability, and competence, very important. In AT&T, they did a lot of business with us because we had PMP certified account directors like me, but you can also look at employee qualification. For example, people having Cisco certification, project management certification, quality certification, all kinds of certifications that you need to have a good contract. Financial stability, very important. If you have a company and they're not financially stable, it can create problems because they could go bankrupt and that could have an enormous impact on your project. You have to avoid that. And I have some examples with the school here in Prague. They ordered furniture. The company was not financially stable. They didn't look at it. And the moment they were expecting the furniture, they found out that the company was bankrupt. So these are things that are important to understand when you're signing a contract. Management experience, also very important, suitable for knowledge transfer and training, and processes to deal with contracts and resolve issues. A help desk. When we work with companies, we have to see that the work that they do, do they have processes that are compatible with ours? Is it possible to integrate? And of course, if we have issues, how can they resolve issues? The help desk is very important. How are these processes in case that something goes wrong? Now, once we have these elements, we also have to verify some financial parameters. And we have, let's say, the break-even analysis. The break-even analysis where we're looking at costs and sales revenue, total cost. This is one of the parameters, the techniques to identify if our contract or the contract is feasible or not. You also may have to do what we call a make or buy analysis. So we are comparing here how much would it cost if we would make it, and is it better to make it or to buy it? There are all kinds of parameters that we can consider here, and in some cases it may be better to buy it. Basically, what PMI says, if we have to choose between make or buy, if all parameters are equal, we would prefer to buy it because the product is already working, it's compliant with what we do, and if we have to make it ourselves, it may be, let's say, introducing more risks because we have to find out how it works, and it's sometimes better to take something off the shelf. Another very interesting element to make a selection is, and we've spoken about this before, multi-criterion analysis. We have different solutions. We have evaluation parameters that are important when we are evaluating the proposals. We have to give them a certain weight. How important are they? We allocate, in this case, 100 points. We give every parameter a score between 0 and 100. And then finally, we have the evaluation where we allocate the number of points for the special parameter. For example, for economy, we give solution 1 85 points out of 100. We do that for all the different parameters, and then we can calculate the total points. The maximum points gives us the best solution. And when we divide the, let's say, the cost by the points, we find the cost per point, which is in fact giving us the most efficient solution. Now, the most efficient solution, it's not always the cheapest solution, like in our case, but like I said, we have to look at all the parameters, life cycle, all those important elements that we have to consider, and the cheapest solution is not necessarily the best solution. So we have to convince our management to take the solution 3 in this case, although solution 1 is a lot cheaper than solution 3. But solution 3 is the best solution and is the most efficient. These things are very interesting to apply on selection of suppliers when you have an RFP or when you have some other proposals. Now, finally, when we finish with this, we have to make an agreement. And what are the major elements that we have to find in the agreement? First of all, there are general terms and conditions. Typically, a company has those general terms and conditions, and they will never be changed. When we have the agreement, we have also to include a procurement statement of work, so which describes the major deliverables. Schedule information may depend on the actual start or signature date. So when we look at it, when will be the different items provided, when are they available? Reporting formats and obligations of both parties. Total and detailed price and payment conditions. We have to identify certainly acceptance criteria of the goods or the services that are provided. We have to foresee inspections, and we have to refer to the quality standards that are applicable here. We may have some incentives and penalties depending on the agreements. There may be insurance and performance bonds. What happens if something goes good or bad? Approvals related to subordinate subcontractors. Companies will have to present their subcontractors, and those subcontractors have to have the same quality assurances than the main supplier. Change request procedures, if it's necessary, can happen. If it's more complex, you can have those procedures included, and termination clauses and alternative dispute resolution mechanism. I want to come back to the general terms and condition at the end. If you want to have different conditions, these can be added to the agreement as addenda to the general term. So you can say general term number 5, well, we adjust this. You will never change the general terms and conditions, but you can have a document stating that some terms in the conditions have to be interpreted differently in this agreement. So that was it for lesson 10. I'm looking forward to seeing you in the next videos, and thank you and bye-bye.